Good day, ladies and gentlemen, and we move on with Barkerville Gold Mines, and with me here is Frank Callaghan, the President and CEO. And yeah, we want to talk now about the company. They are the first time at Commodity TV. Of course, he wants to give us a short overview, but then we go into detail because the company had some difficult times the last 18 months. Frank, thank you very much.
Well, nice to be here. Thank you.
Taking the time. First of all, what is your company doing? Where are you located?
Well, first off, we're in central British Columbia. We're in an area of British Columbia that was initially discovered gold. It's the reason that British Columbia joined Confederation and the railroad went out west. It's true. In the very early 1800s, the city was the largest city west of Chicago and north of San Francisco. It was the big gold rush after the California gold rush.
Yeah. Okay.
Go ahead.
Yeah, so you are in the development stage now,
well,
right?
We are. We're starting. Well, we've produced 20,000 ounces so far from a mine that we bought a couple of years ago, and now we're going to start production on a mine that we actually discovered back in the year 2000. So that production started last week, and we hope by the end of the year we'll actually start gold production from there, and we're really excited about it.
Wow. And what would be the initial production? What do you think?
So the initial production we're expecting to do for the first year is 25,000 ounces. And it's a small mines permit, so it allows us to do 75,000 metric tons a year. And so we're due the government, if it works out well, we're going to try something, a product that we've tested out of Frankfurt and does density testing. And from that, we expect to possibly do maybe even double that amount for the first year. We'll see how it goes.
Okay. Can you say something about the expected all-in costs?
So all-in costs, we're looking at about $900 an ounce. So we'll see how that works out. I mean, it's yet to be proven, so we're hoping that it works out.
Okay, so we hope also that the gold price is rising.
No kidding. We should. Our crystal ball says it should go higher.
Yeah, it gets very good. I sold mine, unfortunately, last week, but that's okay. Very good. What are resources, reserves by now? What is going on there?
So we have a current resource that's an indicated and inferred resource. The two of them combined is about 5 million ounces. And we're working on a new resource estimate that we hope to have ready in the first quarter of 2014. We'll have some new numbers out, and we're expecting them to be higher.
Okay. You have only gold, or you have also some byproducts?
The only byproduct is a little bit, about 8% silver, but we don't actually really bring it. No, it's not much.
No, it helps, of course.
Everything helps. If it's not waste, it's ore.
That's right. Very good, very good. Let's talk about your difficulties you had the last 18 months, because I think the stock was ceased trading.
It was ceased traded.
So what was the reason for that? What happened?
Well, the numbers that were published were quite high, and the BC Securities Commission wanted to ensure that these numbers were correct. We brought in Snowden Mining Consultants, one of the larger mining company consultants, and they went through and did an audit of the work. And on their audit, they came back and they said, it's standing up quite well. The initial resource that they came back with was 5 million ounces. So we're very pleased with the results.
So they've proven.
What you said. Well, it's not. They've actually substantiated the work that was done by the earlier company. We now have had 3 different people that have actually gone through the resource estimate, and it's a solid 5 million ounces as we stand now, both as an indicated number and an inferred number. We expect that in the first quarter of this year, we have some 27,000 assays that are at the lab. So when we get the results back from all of that, we'll have a new number, and as I said, that'll be in the first quarter of next year. So we're expecting it to be higher.
Very good. Very good. So that sounds that you are growing to, slowly but surely, to a mid-tier gold producer in Canada.
Well, let's hope. It's the intention of the board of directors. They actually want to be a producer and a mid-tier producer. So the amount of ounces that we have should help us do that, and looking at a larger facility than what we have right now.
Talking about your financial situation, what is going on there? Are you financed for the whole, going into production or ramp up the whole production, commercial production? Are there any issues with cash?
No, actually, we got quite lucky. Eric Sprott, a couple of weeks ago, wrote us a check for $15 million personally. That was really a very good investment for him, we believe, and he's been a supporter of the company since 2004 when we did our first gold production. We went and did a bulk sample. The grades were quite good, and Eric is a firm believer in the project, and he substantiated that by actually doing this investment himself personally, not through his company, but
himself.
Yes. So his company.
That's a big sign of trust.
It really is, and so for the near term, we're actually well financed. We don't need to go back to the market and raise any money, and the money that we're expecting to see now is going to come from our gold production.
Yes. So you can finance out of the cash flow then in the future.
That's the plan, and
very
it's
good.
looking good. So The amount of shares that we have issued right now is about 109 million, and we'd like to keep it that way.
Oh, that's very good. Okay. What is it fully diluted?
Fully diluted is about 100, just light of 130 million.
Well, that's anyway not that much.
No, it's not.
That's good.
It's not. It's considering where we are in the stage of the company, it's actually a very good position.
What are your plans for 2014?
Well, to do this resource estimate, so we want to see new numbers out in the first quarter, and then we're going to get into a very aggressive drill program on the exploration side to continue to develop more ounces, and then to expand our production. So, as a gold company, it's all about ounces, on how many you have and how many you think you can get. The company's property is really quite large. It's about 67 kilometers long. It has 7 former producing mines on it. We own it all, and so it's go out and find more ounces. We currently have 13 geologists working on the project.
Wow!
So it's a very busy place up at the property, and we're excited. There's lots going on.
I believe that. Fantastic. Yeah, so I would say I wish you all the best for that.
Well,
for
thank you very much.
And make it happen, I would say.
You bet.
Because every good gold mine in production, every gold mine in production is a good gold mine, of course.
Always.
Isn't it?
Definitely. And
Great.
It's nice to be in our backyard in British Columbia.
Thank you very much.
Thank you very much.
Thank
Talk
you.
soon.
Great.
Bye-bye.
Yeah, ladies and gentlemen, you heard it. That was Barkerville Gold Mines, Frank Callaghan, the president and CEO. The mine is there. They are producing. They are, growing the mine next year, and also the ounces will be grown. And you heard it. All-in costs roughly at $900 plus minus. So that's still a good sign, even at those gold prices we have in this environment today. So the company will earn some money, and Eric Sprott invested $15 million. I think that's a big sign of trust. Watch out for the company. Thanks and bye-bye from Zurich.
Thank you.